Hey there, everybody. I had a few questions about the instructions for a project that we're going to be presenting on Monday. So I wanted to make a video to maybe help cover a few of the points, kind of bring in the research you're going to do online together with the math model that we worked on throughout class over the last couple weeks. So what I'm going to do is pick one particular company. Maybe you can kind of follow a similar process when you're working through your analysis, and you really have some freedom to go and investigate and kind of research different places to pull together information. So you don't need to do things exactly as I'm doing here. This is just kind of a way or one example of how you could do this project. So I went to Yahoo Finance. This is one of the sites we've looked at in class a couple times before. I typed in Ford Motor Company. So just right up here where you have the search for news and symbols, you can put the company's name. It'll give you a drop-down list. And the first screen you're going to go to is the summary screen for that company. So notice right now Ford is trading at $9.55. So the whole goal of this project is to figure out, is that a good price for this company's stock? So whatever company you're looking at, you're going to want to put their name in this website, or you could go to other sites as well that'll give you the same information. But if you come in here, you'll put their name in, and you'll see what the price is currently. So if you wanted to buy a share of Ford, that's how much you'd pay for it right now. The question is that a good price? Is it a good investment for us to make? So what we're going to do is use information from that dividend discount model we talked about in class. So remember, we had this little equation that if we're trying to find the price of a share of stock, we look at what the dividend is next year, so that's that D sub 1 we talked about, and we divide that by R minus G. So in problems we've done in class before, I just gave you these numbers, you stuck them in the equation, and you cranked out an answer. What we're doing for the project is actually looking up what we think these numbers should be for real companies. And sometimes you're going to be able to just Google that and you're going to be able to get the number. Other times you're going to have to put information together to try to make an estimate. So we're trying to make a prediction about what the stock's price is based on things we think are going to happen in the future. So it's an educated guess. So we're making our best estimate. And basically what I'm looking for you to do is to do this calculation and talk about how you came up with these numbers. The dividend next year should be really easy to get. If you go, for example, for Ford, if we look here under the forward dividend and yield, which is 0.60, all right, that's 60 cents. That's what they predict next year's dividend payment is going to be for Ford. All right, so if you're a shareholder of Ford, you own a share of that stock, Yahoo Finance predicts next year you're going to get a payment of 60 cents in a dividend. So that's exactly what we're looking for in our equation. So if I'm trying to find, if I'm doing this analysis for Ford, well, the market price we see is $9.55. So our question is, based on the information we're going to look up, do we think Ford's share is actually worth more or less than $9.55? And that's going to affect our decision as to whether we want to buy that stock or not. All right, well, we know D1, all right, that price is going to be the dividend next year. Well, we got that from Yahoo Finance. So we're relying on what they're telling us, right? So if we were professional analysts, we'd actually go out and do a lot more work to try to come up with these numbers on our own, but we're relying on this information from the internet. But we're going to go through the process of actually taking information, real research, and trying to come up with an answer to this problem. Now, to find R, it might be a little bit more difficult. R is the discount rate. So you could Google things like what is Ford's discount rate, or what's the average discount rate for companies in the automotive industry, stuff like that. You might be able to find something, maybe not. So there's different levels of difficulty maybe for some of these find information. Bigger companies probably have more stuff written about them, so more stuff available online when you're looking into them. I posted a spreadsheet on Sakai, so it's called WACC WACC by industry. That's the weighted average cost of capital. Basically, that's a way of measuring a company's discount rate. If you look at all the bonds they have outstanding and all the stock, we're really interested just in the cost of equity. That's what R is in our equation. So this spreadsheet this could be a useful starting point for you. It gives different industries what their average R is. All right, so this column D here, the cost of equity, that's what we're looking for. All right, so say we're talking about Ford. It's an automobile company, so we'd go to this auto and truck row. That's row 24. Go across, and I'm looking for the number in column D. All right, so the average car company has an 8.49% discount rate. So you could use that as a starting point, and most industries are covered on the spreadsheet. The idea is, if you think your companies may be riskier than most companies in that industry, you want to make that R go up. You need to use a higher number than what the average is. If you think your company's safer, it's less risky than other companies in the industry, you could use an R that's a little bit lower than this average rate. I just want you in the paper and in the presentation to tell me why you use the rate that you use for the calculation. So Ford's a pretty large company. I think it's pretty stable. I mean, all companies could face difficulties, but I think it's less risky maybe than other car companies. And if I was writing a paper and doing a presentation, I would try to, substantiate that and come up with some facts and figures. But just for the purposes of our quick example here, the average for auto companies is 8.49. I'm going to say Ford is like 8%. I'm just going to round it down a little bit because I think it's a little safer than other companies in that industry. So we don't need as big of a discount rate. So that R for Ford, I'm going to put at 0.08. All right, that's the second one of my inputs here. The last thing we need to find is the growth rate. And again, I use the spreadsheet as a starting point. I think that might make your jobs a little bit easier. I think people had questions about where to find that R for the calculation. So feel free to use that. But if you found that information from other sites, or from other resources, that's great as well. Just talk about where you got it and why it's appropriate for the company you're looking at. Now, the last thing we need to find is the growth rate in dividends. And for some companies, this is easier than others. Sometimes this information is just out there and you can find it, and that's great. Even if you do just find a number that's given to you, try to justify why that number is what it is. Talk a little bit about what's going on with this company in the news, new products coming out, maybe just different companies coming in or leaving their industry. Talk about how you think that's going to affect the company's fortune. So a good starting point here is to try to find out what the recent dividend payments have been and how they've changed over the last few years, and then use that to maybe kind of guide you as to what you think is going to go on with dividends for this company in the future. Basically, if you think the company is going to be more profitable long term, they're probably going to increase their dividends eventually. If you think they're going to fall on hard times, or maybe not grow as much as they have in the past, then maybe you won't predict they'll have much of a dividend increase at all. So there's a couple of different sites you can go to for this. On Yahoo Finance, if you go to the Financials tab, this gives you information about the balance sheet, income statement, all that stuff that we looked over at the very beginning of the semester. So we have all that stuff. We also have the statement of cash flows. Now, we didn't talk a lot about this in class, but this is another financial statement that you can pull information from. So if you go there, you'll see that we have information about dividends paid. So right down here, we have our dividends paid under financing activities. And notice for Ford, we had, it went up a little bit. And this is 2016, 2017. Let's see here. 2015, 16, 17, and 18. All right, so we have 4 years worth of information right here for Ford on how much they paid in dividends. So we could see it's gone up a little bit over the last few years. So what you could do is look at the growth rate they've had over the last few years. You could calculate that. All right, so if we do that calculation, we could see it grew a little bit in the first year. All right, we had this 2380, it went to 2835. If we look at that calculation, we could see it gained a little bit. We got it right here, under 1%. So it wasn't a very big growth rate in dividends. So from 2015 to 16, we see it went up 0.15%. And you could do a similar calculation for the other years, right? You could do a calculation, see how much it grew from this year to this year, and then, from 17 to 18. So you could look at that to have like a baseline case of, okay, how much of their dividends been growing recently. You could also look at other data. I found another website here, dividend.com. And I mean, what you could do is just Google, Ford's projected dividend growth or Ford's recent dividend payments, and different sites will come up. Some sites want to sell you this information. So what we're learning how to do is some of the stuff that's not really freely available. We're learning those analytical tools to come up with, valuations for these stocks and to figure out what the dividends are going to grow at. Notice this company here, this website, they give you some dividend information. Again, they're saying that we have the 60-cent payout, so that's what they're predicting. Ford's payout's going to be just like Yahoo Finance did. They said there was no dividend growth over the last year, so they give you some information. The payout ratio, that's kind of interesting. That's what percentage of Ford's profits are actually paid out. The rest is that plowback ratio, how much money's plowed back into the company to reinvest and finance future operations. So you could use figures like that to justify your estimates for the growth rate. If we come down here, we see they show us what the dividend payments were over the last, looks like 5 quarters here. So notice it's been 15 cents a quarter. So when they said that 60 cents amount, that's yearly, so that's 4 quarters. So it's been pretty consistent over the last year. For Ford, hasn't gone up all that much. So when I'm trying to predict Ford's future dividend growth rate, I have to take all this into account. I'll think about, recently, how much is it growing? How much has it grown in the past? I could look up information about other companies in the industry to get a feel for how quickly they're growing. And I could use all that information to try to predict what Ford's growth rate's going to be in dividends. And that's information that's not always given to you. Like this company, this website actually wants you to pay for looking up information like this. So they're not going to necessarily give it to you for free. So what we're doing here is trying to figure out how do we collect and come up with that data so we can make good estimates about these companies' prices. All right, notice down here, dividend growth history. They're not going to give you this information. They want you to pay for it. There's a little lock there on the screen. If you click on that lock, you have to register for the website and pay them some money. So this is the stuff we're trying to calculate based on past data. So for Ford, I'm going to say it's not going to grow all that much. I think it's a good company. They got a good future ahead. They have, they're well established. So it's not going to be nothing, but at the same time, they only have so much room to grow. They're a huge company already. So I'm going to say like 0.02 right there. All right. So if I would do that calculation, that would tell me how much Ford's stock's worth given my inputs, right? So that was just the dividend that was given to us right from the website, what the projected amount is for next year. This was our estimate of the discount rate, and this 0.02. All right, that's how much I predict Ford's dividends are going to grow into the future. So if I take, that would be 0.6 divided by 0.06, all right, which would be $10. So based on what's going on here, I predict that Ford shares should trade for $10. All right, they're actually trading for $9.55 right now. So based on this analysis, I think it's a good deal to buy Ford. I'm getting it for 45 cents less than what I think it should be worth based on my predictions. Now, notice all this stuff is susceptible to error, so if I change those inputs just a little bit, I'm going to get a different output. That's kind of interesting, actually, to just do that in Excel. Look at different discount rates, look at different growth rates, and that gives you a feel for actually valuing the stocks and understanding, how those different variables affect the change in price. But right here from the inputs we used, all right, it's a little bit of a deal, but I mean, it's kind of a close call. We're not saying it's worth like twice the going price. So this is our prediction based on the math and the inputs we did against the actual price. And if I was making this presentation, I would just spend a minute or two talking about how I came up with this number and this number. And, you could talk about the company's financial ratios. If they had really good ratios, maybe you'll say they have greater growth prospects, or if they have really low levels of debt. We looked at debt equity calculations earlier in the semester. You might say they have a lower discount rate because they're not as risky. So all that stuff we talked about earlier in the semester with the financials and the financial ratios, you could use those to shape your predictions. All right. But I'm not actually asking you to calculate financial ratios. And a lot of the ratios we talked about, you could get on Yahoo Finance. So there's a lot of great stuff if you want to look around this website. Under statistics for Ford, you'll see all kind of different ratios. And if you're trying to figure out what the company's growth rate's going to be, you want to think about, what are they doing right now? What type of new products are they coming out with? What have they done over the last couple years? And that's part of the research process, going looking up the news that's been going on for these companies. All right, so here's a lot of these different valuation ratios and measures. So a lot of the stuff we talked about earlier in the semester, you can see we have PE ratios. They have information about profitability, profit margin. We talked about that, return on assets, return on equity. All right, so you can use that information to kind of inform your decision on what inputs you want to use, all right, for these equations. So I hope that helped. If you have any questions, send me an email or stop on by my office hours, and I'll try to answer any questions you have. All right, have a great weekend and take care.